How's it go, guys? Um, so, if you're in my Discord or you follow me on Twitter, you realize that I have a pretty set strategy. I like to go over the same setups every day, and today was a perfect opportunity to execute all the different setups that we play. So, we're going to go over a couple different ones here. We got the candles. Candles are important. I will take trades not solely based off a candle, but because of a certain type of candle formation. We have wedges, whether it's a descending wedge, ascending wedge, rising wedge, anything like that, we're taking. We got fibs, 50 and 61.8 fib levels. We're taking those, okay? Retest to hold support, turn to resistance, or resistance to support. We're taking that as well. And lastly, bull flags, bear flags, we love those. So today we got a good example of pretty much every single one of these setups. So to start off the day, we got this bearish inverted hammer. This is one of my favorite setups to start off the day because lets me know bears are in charge. Whenever you get this bearish inverted hammer on a gap up day or anything where you're showing strength early in the day and you get this bearish hammer, I'm expecting trend day right away and not north but south. So we get this bearish inverted hammer. This is where I took my first trade. I entered short at around, I want to say 3D8.5. This wick allowed me to get a great opportunity for a good entry. So entered short around here at 3D8.5. And where we're scaling out, at the nearest support point. So we get this this demand zone at low of day at this pre-market low that we tested, and we're able to scale out all of our entry at this demand zone. So first trade is a success. We're able to implement our strategy on that bearish inverted hammer. Next trade, there's a couple things you want to notice here. We bounce out of this demand zone, we retest it again. We bounce out again, we retest it again. Now, what are we doing in all these times of retesting? We're creating a lower high. So that's the first thing we have to notice is, okay, we have 3 lower highs. What else do we notice? Okay, we're getting some kind of lows that are looking a little bit lower, okay? So we got these 3 lower lows, 3 lower highs. That can only tell us one thing. We're forming a descending wedge, which is, of course, a bullish setup. So once I notice this bullish setup, I'm entering calls not when we break out, but I'm entering calls in this supply zone. That gives me the best risk reward, and I'm trying to enter them as close as I can to the bottom trend line as possible. This allows me to pretty much be able to exit 10, 20 cents below my stop loss without having to risk too much, while my reward is anything above this. So I think I entered around 37.3, and I entered calls. And one of the main things whenever you're entering a trade, you always got to have your exit plan. So for this case, my exit was the 61.8 fib level. Whenever I'm taking a trade around any demand zone or supply zone, I'm using these fib levels because that's where we're going to get that retracement too. So I actually exit all of my shares right at this 61.8. The trade worked out perfectly. Of course, it's not always going to work out this perfect, but this time it happened to work out that perfect. So we exit at the 61.8. We're 2 for 2 on the day. And we're looking for our next trade. We're getting some real chop around this 61.8 fib level. We had a bearish rejection on a trend line on the 30 minutes, so this allowed me to have a bear bias. But the 61.8 fib level, and we just made another lower high, allowed me to go short. We had this very bearish rejection on this tweezer top right here at 845. Once I noticed this, I pretty much started scaling into puts, and I had my stop loss set right there at 61.8 fib level. I have a good risk reward, and I'm pretty much aiming for this to retest demand zone. The nice thing is we never actually showed any sort of support at this demand zone. We kind of just went right through. So once I entered short at around, let's say 3D8.3 type, we're going to enter around 3D8.3 on this 61.8 and 50 fib level rejection. We get this bearish inverted hammer, and we pretty much strike right through. For this, I held, I think, most of them down to here to around 385, if I remember correctly. Typically, what I did for this is I ended up just scaling over my profits, and I entered into a cheaper contract that I swung. So, but anyways, so let's clear our chart real quick. So we have a couple different setups that we took. We took that rejection of the 61.8. We took that bearish inverted hammer, and we took that descending wedge. That's 3 different setups that are all perfect. Fourth setup of the day was this retest of this demand zone. So we can see these wicks in this demand zone, and this was a perfect example of the retest. Once this candle rejected on the 5 minute with a red candle. We're not looking for just any sort of retest. We don't want to just enter without any, with it just striking right through. Okay, we're waiting for it to prove itself that it's going to retest and fail. So we get that red candle. We're entering. I didn't play this because I was already in puts, but it gave me more conviction for my put position that I already had taken. Let's say you entered around 388.2. You're given pretty much this 90 MA is what I would have. This is what I was writing for my entry. Um, and you're writing this 90 MA all the way down. Fifth setup that I would be looking to take. This is something that I usually take on the 3 minute. Bear flags can be found on the 5 minute, of course, but I like them tend to be more effective, and I get a better entry when I'm taking them on the 3 minute. So this bear flag on the 3 minute, you see we got higher lows. We also have higher highs. That allows us to know this is a bear flag, and we're looking to enter short. Once we got this bearish inverted hammer on the 5 minute, that gives us more conviction. We can flip to the 5 minute as well. You can see we're still below the EMAs. We're still in this red bearish EMA cloud, and boom, we get that 4 or 5 candle drop. So to recap of all the different trades that we have the opportunity of taking today, we had a bearish inverted hammer. We have a descending wedge. We had a rejection of the 61.8 fib level. We had a retest of an old support, which turned resistance. And then last, we had a bear flag coming from recent lows. All 5 of these great examples of trades that you should be looking for to take every single day. Hope you guys learned a little something from this video and able to implement these examples of great opportunity into your trading. Hope you guys have a great rest of your week. Thank you.